quick look at the S&P 500 as we get ready to trade Friday, June 11th, 2021, the end of June week 2. So when futures reopen tonight, we will be on the September contract symbol for ES. And then that ES contract will expire next week in June week 3, along with S&P 500 options on Friday's open. So just remember that about next week, that we're already in monthly OPEX for the month of June. And remember, there's two sets of expirations that you can choose from for options for next Friday. Those AM ones are the monthlies, and the end of day ones are just your normal average Friday expiration options. The monthly options, I think, are okay to use now through the end of the day Tuesday. Maybe if you hold them into Wednesday, that's fine. You don't want to be in those monthly options after Wednesday. All the big players sew up their bets on Wednesday in those monthly options. And usually you're going to get picked off and gamed if you stay in them after that. You should be rolling into or looking at the Friday end of day. If you place a brand new trade at the end of the day on Tuesday, and most certainly if you're going to start a new trade on Wednesday, you want to be choosing the Friday end of day stuff. Okay, we're starting off with the roadmap. It's a little crowded up here at the top of the roadmap just because, you know, we've finally broken out and we want to see where things come back down, reel back into, and show us support. A couple of levels that became important as we were grinding things out since the beginning of May, when we made this all-time high at 42.3804, is the halfway back on the day of that range, the range of that day. You can see that this was on a Friday. This is where we set our weekly and daily all-time closing highs as well. The next day was on a Monday. We failed to make a new high, and then we had that nasty sell-off that just got like scarier and scarier as the day went on, and fell all the way down here and broke the 10-day simple moving average. And from there on, this is kind of a close-up version of the chart, but from there on, we really struggled back and forth and back and forth. And here we are finally on June 10th, breaking out and making a new all-time high. But if we look back down here at the bottom of all these candles of the last several sessions, you see that they all kind of work their way around this halfway back level from back here on the day that we made the all-time high. See here, we were resisting it. We couldn't make a close above it. We made a single close above it here, but then we kind of struggled and struggled for 3 days, and then finally, last night on Wednesday, we closed right on this halfway back level, and then today, Thursday, we gapped up open and ran up to a new all-time high. But something was going on during the day where we ended up selling off. In the late morning, you can see here's what happened. Here is that same chart in the 5-minute time frame. Here was our open, our burst up to the new all-time high, and then this all sold off and almost completely filled the gap back to Wednesday's close. But then we moved back up again. So this is really the kind of workings that you see when we have contract expiration. We have these wild swings, but what we've kind of gotten used to is wild swings, as in we'd have a 2-day 100-point rally up followed by a 2-day 150-point sell-off from there. But we're not getting that this time. Instead, we're kind of like in a sense of stagnation, like some huge bet was placed up here to keep us down, to keep us short below maybe 42.50. And then today we just saw it all happen quickly before our eyes. This gap up open, this run to a new all-time high, and then this crash down to fill in this gap. But we reversed here. We came back. We got the job done. Initially, our halfway back on the day was here at 42.3890. So that was right around where our old all-time high was. That was the halfway back between the open and this initial high. But as the day wore on, that halfway back changed. That's why that area is kind of crowded on the roadmap right now. We came back. We did not take out the high of the day. We sold off a little bit more here at the final hour, but we did stick the landing, make our new all-time closing high. Our previous all-time closing high was like 42.32 and change. We got our new all-time closing high up at 42.39. It was above this initial halfway back in the day, and it was a close above the old all-time high. And that's all very bullish, in my opinion, based on my years of watching this stuff. Those are the kinds of things that you want to see in a healthy, good, new all-time high. So one more look at that roadmap. So this is what we've got going on here. We have a brand new all-time closing high today. at 42.39.18. And our initial halfway back on the day was this 42.38.90. I might end up taking this level off of here just to clean things out a little bit. Just leave it on there for another day or two to see if it matters. The real halfway back on the day, after we took that like little crash in the morning and nearly filled this gap in to Wednesday's close, our real halfway back on the day is about 42.35. Our old all-time closing high, which we took out today, is still relevant because it is the weekly all-time closing high, and tomorrow is Friday. So we're looking to hold things together and close above at least 42.32.60. So if we have a wild swing tomorrow where we come in and we start selling off, be prepared for a move back up that takes us back up to close above 42.32.60. If we come in and we rally to a brand new all-time high but then get slammed back down like what happened today, be on the lookout for this level to hold, this 42.32.60. This is an important level. Be on the lookout for it. If we make a new weekly all-time closing high tomorrow, it will also be a new, well, no, it doesn't necessarily have to be a new all-time closing high because there is some room here between 42.39, today's new all-time closing high, and the existing weekly all-time closing high of 42.32.60. If we do make a new all-time high tomorrow, if we burst up through 42.50, we want to make sure that we hold the close for the day above 42.39.18, and that in and of itself will end up being a new weekly all-time closing high as well. As I've been telling you all along, our next target for a new all-time high was at 42.44. That put us at plus 13% on the year, and then after that we would go after the option strikes. As noted here, this note has been on the chart for several weeks. And what was our high today? 42.49.74. So clearly they are taking a little look below that 42.50 option strike and selling it off from there. So let's see if tomorrow we can come in and burst through the 42.50 level, or do we make a little bit of a lower high and wind up having some kind of an inside day to today. When we have a huge range day like the one we had today, you often do get an inside day the next day, and it's kind of sucks for option trading because you make no money unless you catch the nice edges of that range and short your against your long calls or short against your long puts. Then you make money in that. Let's take a look at the simplified daily chart in a little bit more close-up fashion here. Our median line now rises all the way to 44.19. So this is a long ride to get to the median line now. That's where our target will be eventually. On the way to getting there, we have a couple of levels, beyond getting beyond 4,300, which is, the whole process of getting through 42.50, 42.60, 42.80, plaguing through that whole 80 handle rule and getting to 4,300. Once we get to 4,300, we have a couple of little stops we can look out here for. A measured move target of ×2 up the Q1 range would take us to 43.26. And that's a very typical place that we usually end up stopping once we cross over a new big handle like that. Once we cross over to 4,300, we might get caught up for a week or two around 43.25, 43.30, and right here we would be at the measured move target. Mixed in here, it's over on the left-hand side. 43.19.50 would be a nice clean plus 15% up on the year. This 42.44 was plus 13%. So naturally, that nice round number of plus 15% makes a lot of sense. If we can get through this stuff, we go into the 80 handle rule again, working our way through 43.50, 43.60, 43.80, just like we're doing it here with the 4200s. And then our next target will be wherever the median line is at that point in time. This thing rises 6 points a day. It's at 44.19 at the 44.19s on Friday. By the time we get another 2 weeks out from now, that'll be 60 points higher. So food for thought. But the same thing that also rises at 6 points a day is the bottom of the bull fork, and this thing is rising up very quickly. And you can see that it's right in line there, that if we were to break down below the 10-day, below the 20-day, below the 50-day, this is our next stop, would be the bottom of our bull fork. So if we come in tomorrow and we have a little bit of a weekday, we'll be looking for this 10-day simple moving average to hold. And if it breaks, we look for the 20-day to hold. You can see back here a couple days ago, actually more than a couple days ago, so it was like last week or maybe at the end of the week before that, we had a failed high and a couple of days of selling. And you can see how the selling took us right down for just a little look below the 20-day, and then a rally back to close back above the 10-day. So look for this same kind of behavior to happen here if this is what we end up going through tomorrow. But I have the feeling we would just be in an inside day. If we see weakness tomorrow, it'll be Friday OPEX fuckery. It'll be because, some big fat player is short the 4250s, and there's no way we're going to get beyond 4250 until maybe next week once those options are out of the way and once the ES contract has rolled over and people are fully rolled into that new symbol. Then maybe they'll take the market up and they'll trap all the little people in, all the little people who don't know what they're doing with futures and are still buying the June contract, and it's the last week, and they're shorted, and they're going to get stuck. They're going to get stuck short, and they're going to have to pay up to get out of that contract. So that's the kind of typical thing we see and why we see those wild swings as we get to the end of a quarterly expiration. Okay, one final thing. Let's just take a quick look at how the options played out today. The June monthly options. Oops, I'm sorry. Let's just take a quick look here. Big volume standout in the 42.75s. Just because there's a big volume standout doesn't necessarily mean it's where you should go, but it really is, that $8 window, and it was bouncing back and forth between. I showed a chart earlier today. You can go through the 10 or 11 tweets that I made today. I showed you a chart of the 42.75 calls, and they topped out at $15 in the morning, and then came down to $8 at the low of the day, and then with decay as the day wore on, you see how they ended the day as well in the $8 window. I think that was the 42.75s I was showing. At any rate, that's where I would be focusing my attention. We had been looking at the 42.50s for the longest time. Now we can move on to the 42.75s if we're going out this far in time. If you're going to use Monday still, I wouldn't really recommend it. There's not enough time to keep trading these Mondays. But if you know for sure you're going to day trade them and get out of them, your 42.50s are still pretty good to go. You could go up. You could go up a little from there, but I would really stick with buying these monthlies to give you a little bit more time. And as we get to Tuesday or Wednesday, you want to be in the Friday end of the day options and not even in these monthlies anymore. As we get into Monday, Tuesday, late day Tuesday, and certainly by Wednesday, you want to be rolling into the Friday end of the days. Okay, that's it. I hope this video helped you out. Have a great rest of your evening. As always, good luck and good trading.